Today is the 17th of October 2022. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. So let's take a look at the S&P 500. This is data from the SPX, which of course has the S&P 500 as its underlying instrument. And this is the bigger picture. The important thing about this analysis, which is one that we've been tracking for many months now, is that we have the 54-month cycle trough that formed in March of 2020, what I sometimes refer to as the pandemic trough. And there could be some discussion about the magnitude of that trough, but I believe that it is of at least 54-month magnitude, which means that we have experienced one 18-month cycle trough since then, which is this trough in early October. And I've discussed the position of this trough in previous market update videos, so if you are not familiar with this analysis, I would encourage you to go back and take a look at previous videos in this series. So that was our first 18-month cycle that elapsed over there, and we are now, of course, in our second 18-month cycle. That 18-month cycle is now turning down and is expected to bring us into the next 18-month cycle trough, expected early next year. So this is the nest of lows. A nest of lows, of course, is made up with a stack of circles and whiskers. The circles represent the next expected time of the trough of each cycle in the nest of lows, and the whiskers are the lines that extend to each side. You might notice that the circle for the 18-month cycle is displaced over here to the right, and of course this semicircle has a similar displacement, positioning the next trough for the 18-month cycle fairly far over to the right. Now, there have been, of course, or there will be, two 40-week cycles within this 18-month cycle, and so this trough indicated by the semicircle here, and this trough indicated by that semicircle must occur synchronously. It's the principle of synchronicity that Hurst defined 50 years ago. And so why are they displaced on the chart? The reason for that is because the circles and the positions of the semicircles are calculated on the basis of the recent wavelength of the cycle in question. Sentient Trader refers to the past 6 iterations or waves of a particular cycle when calculating that recent wavelength. And when it comes to the 18-month cycle, that means that we are looking back about 9 years to calculate the recent wavelength of that 18-month cycle. However, we know from the principle of variation that the wavelengths of these cycles are constantly varying. And so when you see a longer cycle with a displaced circle off to the right over here, and then below it a fairly neat nest of lows, and let me just clear all of this drawing. Here is the fairly neat nest of lows expected early next year in about February, apart from this displaced 18-month cycle trough. When you see that kind of situation developing, it usually means that the cycles have been experiencing shorter wavelengths recently, as reflected in the recent wavelengths of the shorter cycles, the 40-week and shorter cycles. The only reason that the 18-month cycle circle and the base of that semicircle over there is displaced to the right is because the shorter wavelengths have not yet been reflected in the calculation of the recent wavelength of the 18-month cycle, which is a very long way of saying that basically I am expecting the next 18-month cycle trough to occur over here above this nest of lows and the position of this 40-week cycle trough in about February or March of next year. While we are looking at the bigger picture, let's consider these two 18-month cycles and what we are expecting in what is left of the second 18-month cycle. First of all, the first 18-month cycle experienced a very bullish cycle shape. As you can see, cycles make M shapes in markets because of the principle of synchronicity and harmonicity. And if you don't understand that, I would encourage you to download the 10 Core Concepts document that there is a link to in the description below this video. That is a very bullish M shape that formed in the first 18-month cycle. In other words, it's distorted very much to the upside. We measure bullishness in two ways. The first fairly obvious way is the fact that the cycle shape ended much higher than the level at which it started, which by definition makes it a bullish cycle. But the other way in which we measure the bullishness of a cycle is by measuring the position of the peak, which you can see occurred very late in that 18-month cycle. A peak that occurs in about the middle of the cycle would be a neutral cycle shape. An early peak is a bearish cycle shape, and a late peak is a bullish cycle shape. And so we had a very bullish 18-month cycle that elapsed from March of 2020 to the beginning of October last year. Let's take a look at the second 18-month cycle and the shape that has started forming there. First of all, we rose up to an early peak, and then we came down to the 40-week cycle trough that I've discussed in previous market update videos that formed in June according to this analysis. Then we experienced another move up, which is, of course, the beginning of the formation of the second part of the M shape. And now we are moving downwards into the next 18-month cycle trough expected early next year. That will, of course, complete the M shape. You can see that the M shape that is unfolding is already very bearish. Of course, price has already come down a fair amount, making it a bearish cycle shape so far. But the important thing here is that it experienced an early peak in the cycle. You can see that peak occurred after only 2 or 3 months of the cycle shape elapsing. That's a very early peak for an 18-month cycle. And so we are in a bearish 18-month cycle. If we zoom in a little further, this is still a weekly chart. You can see the M shape for the 40-week cycle. There is that M shape, a bearish 40-week cycle with an early peak and bringing price a lot lower. That is, of course, the first 40-week cycle. We are now in the second 40-week cycle, on our way down into the 18-month cycle trough in February of next year. And the unfolding M shape has only experienced its first 2 legs for this second cycle, a move up to the peak of the current 20-week cycle, and price is now moving down into this 20-week cycle trough. So here is the nest of lows for the 20-week cycle trough, and we will, of course, expect another 20-week cycle to elapse to bring us down into the big 18-month cycle trough expected early next year. The big question, of course, is has this 20-week cycle trough formed in the markets, or does it still lie ahead of us? And that's the question that we're going to tackle in today's video. Here is that same analysis, but this is a daily chart, and here is the nest of lows for the 20-week cycle. You can see it's a fairly neat nest of lows, indicating that these cycles are next expecting their troughs fairly close to one another, and that is pretty much centered around this week, raising the question of whether this trough that formed last Thursday might be the 20-week cycle trough. Let's consider that. First of all, you can see over here there have been 122 days since the 40-week cycle trough over here in the middle of June. The average length of a 20-week cycle is 136 days. And so if this was going to be an average length 20-week cycle, it should still lie about 2 weeks ahead of us. Over the past couple of months, I've been discussing the finer details of the position of the shorter cycle troughs, the 80-day cycle troughs and the 40-day cycle troughs. And I would like to point out here that an interesting thing has happened in this analysis. That is that the position of this 80-day cycle trough over here has been marked as the middle of August. And that trough position in price is over here. Now that is a very questionable trough, I'm sure that you will agree. In previous market update videos, I've discussed the possibility that this trough over here might have been an early example of that 80-day cycle trough, or in fact the 80-day cycle trough might have formed over here. Either one of those two positions are probably a better position for this 80-day cycle trough. Let's then look at the 40-day cycle trough. Here is a 40-day 40-day cycle trough, which has been positioned over here. Also a questionable position of that 40-day cycle trough, and the next 40-day cycle trough is positioned over here. Also fairly questionable. So why has Sentient Trader performed this analysis? It's because recently these cycles have been distorting, and they have been stretching both longer and shorter, and it has been fairly challenging to perform this analysis. Sentient Trader performs an analysis by solving a very complex puzzle. It's not only looking at the position of these 80-day and 40-day cycle troughs, it's drilling all the way down to a 5-day cycle in the end-of-day analysis, and it is solving for the best possible arrangement of all of those cycle troughs. Recently, this has been a challenge, but I will show you another chart in a moment that presents a different analysis picture. The important thing for us to consider now is whether it is possible that this 20-week cycle trough formed last Thursday. Here we have a very neat nest of lows, but we have a fairly questionable analysis. In that kind of situation, we need to turn to our cycle tools to receive confirmation that the 20-week cycle trough has formed. And in this case, the cycle tools that I am going to look at are the VTLs. VTL is an acronym for valid trend line. When price crosses up above a valid trend line, it confirms that a trough of magnitude 1 degree greater than the cycle that the valid trend line is based upon has formed in the market. So this here is a 40-day cycle VTL. If price crosses up above this 40-day cycle VTL, it would confirm, in theory, that an 80-day cycle trough has formed in the market, meaning that this trough over here would probably be the 80-day cycle trough, and by the principle of synchronicity and harmonicity must also be the 20-week cycle trough. However, I say in theory, because we have to take a look at this valid trend line and ask ourselves whether it is really a valid trend line. It does follow the very simple rules that Hurst defined for drawing valid trend lines on your Hurst cycles analysis charts. However, the danger with the VTL is that it is very closely based on the analysis that is on the chart. And so these troughs that I have recently been drawing question marks over have caused this valid trend line. In particular, you will notice if we zoom in here that this 40-day cycle trough over here on the 16th of September has been positioned here. And so the VTL for the 40-day cycle is working with this 40-day cycle trough in terms of positioning that VTL. That is a very questionable position for the 40-day cycle. Therefore, I would question the fact that price crossing this 40-day VTL is actually a valid indication that an 80-day cycle trough is formed in the market, because that VTL doesn't look quite as valid as it should be to me. Another warning sign about this analysis is the position of the 20-day VTL. Usually VTLs are arranged from the shortest cycle upwards. In other words, the first VTL that price crosses is the shortest cycle in the nest of lows. Then price will gradually cross the longer cycle VTLs, thereby confirming by degrees the magnitude of the trough that it is bouncing out of. When you have a 20-day VTL that is sitting above a 40-day VTL, that is certainly a very big question mark. And so, when it comes to this analysis, I am not focusing on this 40-day VTL. In fact, I'm going to hide it. This 20-day VTL, however, is a little more interesting. Again, I'm not sure that it is really a valid VTL because of the fact that it is based so closely on the analysis we're seeing on this chart, which has many questions to it. So let's take a look at an analysis that has fewer questions and is, in my opinion, a better analysis of what is happening at the moment. Here is that analysis, and you can see we still have the 40-week cycle trough over here in the middle of June. The difference with this analysis is that I have pinned, in other words, I have influenced Sentient Trader to position the 80-day cycle trough at a later position over here. The result of this analysis is that the trough that formed over here at the beginning of October this year was a trough of 40-day magnitude, indicating that we have another 40-day cycle to go before the 20-week cycle trough is expected. An interesting thing is happening here with this nest of lows. As you can see, we have a very neat arrangement of all the shorter cycles right here at the beginning of November. The 20-week cycle circle is a little displaced to the left, and the whisker for the 20-week cycle extends all the way back to the final week of September. The whisker, of course, indicates that it is possible that the 20-week cycle trough is going to form within this range of time. But as I've already mentioned in today's video, the longer cycle in a nest of lows is based on a look-back period, which is much longer than the other cycles. And if the other cycles have recently been stretching, then the 20-week cycle circle might be an inaccurate positioning for the expected time of the next trough of the 20-week cycle. As a matter of interest, why might the shorter cycles have been stretching? There is a very useful phrase that Hurst defined and mentioned in his cycles course, which is that when the underlying trend, in other words, the combination of all the longer cycles, is bullish, then we expect late peaks and early troughs. On the other hand, when the underlying trend is down or bearish, and the markets are generally bearish, which is of course what we have seen is happening at the moment, then the peaks will tend to occur early and the troughs will occur late. Troughs occurring late means that the cycle wavelengths are probably going to stretch longer. And so I am inclined to pay more attention to these shorter cycle circle and whiskers, and I'm expecting the 20-week cycle trough to lie ahead of us. However, last Thursday's low point in price is sitting right over this line for the 20-week cycle whisker, and that indicates that it is possible that the 20-week cycle trough has formed in the market. So let's take a look at our VTLs on this chart and see if we can make any sense out of what is happening here. First of all, let's speak about this 20-day VTL over here. As I've already mentioned, you usually have the shorter VTLs. This is a 10-day VTL. Below the longer VTLs, this is the 20-day VTL. But this is a different situation because price has clearly crossed above this 20-day VTL, confirming that a trough of 40-day magnitude has formed in the markets. And that trough is this trough over here. And so there is no contradiction in the positioning of these VTLs. This VTL has already been crossed, as you can see. Price did something that it often does after crossing a VTL. It rose up and then it came down and actually tapped that VTL one more time. And so this 20-day VTL is not actually pertinent to our current discussion. Let me hide it. We now have a 10-day VTL, and if price crosses above this 10-day VTL, it would confirm that a trough of 20-day magnitude has formed in the markets. Is it possible that the trough that formed last Thursday was a 20-day cycle trough? It is absolutely possible. If price crosses strongly above this 10-day VTL, then we would confirm that the 20-day cycle trough has formed in the markets. We would not yet know whether a greater magnitude cycle trough has formed until we can experience more price action. Of course, when price crosses above the 80-day VTL, that would confirm that a 20-week cycle trough has formed in the markets. But most traders will not wait for that to happen. What we will be doing is watching very carefully the cycle shapes that are forming in this market. Here is the cycle shape for the previous 40-day cycle, and here is the unfolding cycle shape of the current 40-day cycle. Price is bouncing up again. Now it might have formed the 20-day cycle trough, but we are expecting it to come down lower into the 20-week cycle trough over here at the beginning of November. I hope you found this market update useful and interesting. If you have any questions, please join us on our Hurst Cycles Discord server. I will provide a link to that in the description below this video. And of course, you are welcome to ask your questions in the comments below this video.